Hey y'all, my name's Amanda White. I'm a realtor here at Christie's, and we are here with Austin Reddin, a senior mortgage broker, and he's here to answer some of our questions. First, I'll let him tell you guys a little bit about himself.
Thank you. Yeah, appreciate it,
Yeah.
Amanda. Thanks for having me. My name is Austin Reddin. I'm a senior mortgage broker here in Austin, Texas. I've been in mortgage lending for over a decade, primarily serving the Texas region. This is my bread and butter here, my relationships, my clients, and where I live. But yeah, I've been passionate about mortgage lending and helping people getting into homes and working with.
Yep, several of my clients.
That's right. Yeah, and amazing rock stars such as Amanda. So yeah.
Thank you.
Yeah.
Yeah, awesome. Real quick, since we just brought up the term, what is the difference between just a lender and then a senior mortgage broker?
Absolutely. Yeah. So we're not all created equal, not all banks and titles. So being a senior mortgage broker, I think is just kind of the top of where you can be in the mortgage lending world.
Okay.
Being so, we have expansive mortgage loan options. We have all the loan programs. We have super low wholesale rates and fees. Our processing team is in-house. So rather than having just one door for you, we have multiple doors. You know, if you're a first-time home buyer, if you're a seasoned investor, if you're wanting to buy land or build a
Yep.
home, I mean, there's options for everything. Other than that, you have, your credit unions and your retail and your big banks. I just like to think that the broker has all of those options, plus the white glove service and the low rates and fees.
Yeah. And I know a lot of clients, they'll see stuff online, a big box, like you said, that's nationally, and they'll say, oh, I think the rates might be better there. Why would you say someone, because I know in my opinion, having someone local, easier to text if I need like a quick fee sheet or what's the monthly going to look like. So why, in your opinion, is it better for someone to look for a local mortgage broker?
Yeah, totally. I mean, going online's a big thing nowadays, right? So you can just type online and say low interest rates or whatever, and you can get an online lender, what I like to call them.
Yeah.
They may advertise some low rates and fees, but they're not local in your community typically, nor do they know the area. Do they know the real estate professionals involved? Do they really care about your transaction, if you close on time or not? They're very elusive. Can you reach them on the weekends if you need it in a crucial time? Unlikely. They may drive and have some decent deals, but I'm also able to compete with that or even beat their deals. And then on top of that, be present with you and the buyers and even the seller party and everyone involved, providing updates and being able to call and talk and text or even show up in person.
Yeah.
And do that. So having the best of both worlds with that.
I agree. Obviously, especially for first-time home buyers, they're strapped for that. They want the lowest rate and the lowest cost. And so they think, well, local, may not be able to provide that. But most of the times, once someone goes under contract, I'm recommending, hey, send that out to a few lenders. And I guarantee you, you're usually right at the top and you're local. Easy for me to text and get answers quickly. So it makes me look better as well.
Absolutely.
Versus some of those big boxes where I'm like, you're waiting for those 8 to 5 hours, and that's never when you're looking at houses or need your questions answered.
No, and it can be a little bait and switch looking online. In
Yeah.
the small print, maybe they're charging additional fees or origination or buy down with the the interest rate they're showing you, or it's very easy for them to flip the script, and there's very little reciprocity against them. What are you going to do? You're going to call the 1-800 number and try to talk to somebody there?
Good luck.
Not really. So the accountability can be hit or miss with the online, but with the trusted local professionals, it's always going to be 10 out of 10.
Yeah, definitely. No, I agree. Awesome. No, those are great points. So a lot of people right now are seeing, the rates come down slightly from where we were, a few months ago, but they're still somewhat higher than we saw in 2021, 2020. But what do you tell buyers when they're asking you, should I wait for the interest rates to drop before buying? Should I lock something in now? What's your kind of go-to response to someone that's just on the fence right now?
Yeah, definitely. So, interest rates are slightly elevated compared to maybe the lows we saw the past couple years ago.
Yeah.
But if you look at the history of interest rates, the current rate right now is not skyrocket compared to
Right.
maybe a 10, 20, or 30-year chart.
Right.
I also like to lead with talking about their budget. So let's establish a maximum desired purchase price,
Right.
a cash to close, that you're comfortable with, and then let's not talk about interest rates. So
Yeah.
we will establish what the monthly payment estimate going to look like
Mm-hmm.
and what the cash to close estimate is going to look like.
Right.
And if those two jive and they work, then I'll say this is what the attached interest rate to that would be. So they're less focused about what the percentage of that is, but more about their monthly budget and
Right.
what can work for them. Because you can always get inside the home and then do a refinance as well as rates trend downwards.
Right.
We are seeing that happen. It's
Yep.
slow,
Yep.
but it is steady. But yeah,
Yeah.
I like establishing the budget first rather than can I shave a fraction off the interest rate to save me $10 a month,
Right.
type of thing.
Yeah.
Yep.
And I know obviously we're working on a deal where we kind of had to be creative on getting the monthly payment down because, that is, especially for a first time buyer, they're putting down a big chunk of, it's their first purchase, so they are putting down their money. It's not like they're carrying over equity from a home. And there's creative ways to get that monthly down. We obviously did a 3-2-1 buy down.
Yes.
If you want to explain what that was and
Yeah.
how that worked.
Yeah, so being a first-time home buyer can be pretty scary, right? So you're doing two big things. You're buying a place you're gonna, live in and love, and it's probably the number one largest purchase of your life, right?
Yep,
and then two, it's your money, right? So it's your financials and money you have in the bank and down payment and monthly payment. So we came across this, home and we were running some estimates and being, a mortgage broker, we have lots of options, customization tools, loan programs. So it's not one box they can fit into. We have a few.
Right.
So Amanda described what their desired budget really whittled down to because it kind of moved a little bit and then came into frame.
Yep.
And then also their cash to close scenario. So we were able to switch the loan program, introduce seller concessions that Amanda fought for.
Exactly.
Yep. And then use that, most of it, for a large interest rate buy down, which we chose the biggest one, which is a 3-2-1 buy down, and that's a temporary buy down.
Right.
But you get more bang for your buck if instead of being fixed for all 30 years. And what that means is, so for if the interest rate is, I think what we locked at 5.75.
Those are the ending rate. Yep.
Something like
Correct.
that. Yep. So your interest rate's going to be 3% less for the first year, and then for the second year it's 2% less. Third year 1% less than that, and then year 4 through 30 is that fully amortized 5.75% interest rate for years 4 through 30, which is huge.
Is that where we're at right
It's
now?
big.
So you're saving that on the front end, hoping that raise at the job, or able to save the first few years, so
Yes.
then you feel comfortable
Yes.
with that monthly in 4 years.
That's right. So, taking 3% off that interest rate for the first year saves hundreds and hundreds of dollars compared to if you took that off the top of the purchase price, let's say $20,000, you might be saving, I don't know, like $50 to $100 a month.
Right.
In terms. So if you get the seller to pay for it, those rate buy downs, temporary or permanent, are huge.
Yeah.
in
And
saving
right now,
money.
sellers, doesn't hurt to ask. I've had that with a few of my buyers now,
Yeah.
paying for the closing costs, buying the rate down.
Yeah.
It's a great time to get what you need.
That's
If
right.
it's more cash or like bringing less cash to the closing table,
Yeah.
or less per month.
Yeah.
Yeah.
On that topic, if you could, levy for seller concessions to pay for closing costs, I mean, that's real money you're saving.
Right.
That it's not coming out of the buyer's pocket. In a perfect world, they're just bringing their down payment, and the seller concessions cover their closing costs.
Yep.
And that's huge.
Yeah.
Rather than just whittling them down to the lowest sales price.
Right.
And then you're responsible for all the closing costs, your down payment. It can
straps
kinda
you
add
for
up.
anything you may need moving,
That's
costs,
right.
all that.
Yeah.
On that note, a lot of people think 20% down is what's needed for a home. That's not obviously the case.
Yes, yeah. So that myth is still floating around in 2025,
Yeah,
believe it or
it's
not.
wild.
So, folks, 20% down is not the minimum
Not
needed
needed.
for a
Yep.
home purchase. First-time home buyer or not, you don't need 20% down. There's a lot of cool loan programs that even aid 0% down.
Yeah.
If you're a veteran or active military, you can do a VA loan.
Right.
USDA loans are geared for more rural properties. We don't see a
Right.
lot of the eligibility here inside the Austin city limits,
Right.
but that's also a 0% down loan.
Okay.
Other than that, if you're doing conventional financing or maybe FHA financing, we're looking at about 3 to 3.5% down
Yeah.
for
Yeah.
your primary residence purchase.
Right.
Beyond that, you can always put as much money as you want down too.
Right,
So
right.
you can go above and beyond if you like. I like reviewing numbers with the buyer
Yeah.
and making sure we get that perfect spot.
I always found it interesting. I think we may have worked a deal where it was actually a better rate if they put less money down, which is always funny to me, but I know there's reasons for it. It's just kind of silly, but
yeah.
and then just hold on to the cash, put it in a high
That's
yield
right.
savings account,
Yeah.
or you can, if you do get a lump sum, put it into your mortgage and then
Yes.
recast it, correct,
Yes.
to change the monthly.
Yeah. So depending on the wholesale lender we use, some of them like less money down because they're going to have a bigger loan amount,
Right.
and thus they give you better interest rate pricing.
Yeah, it's
So
crazy.
it's almost like an incentivizing type of way.
Mm-hmm.
But once your loan terms are fixed and closed, you can always go pay more per month in principal. You
Yep.
can do lump sums. You come across a big work bonus or an inheritance, and you want to put a lot of money down into it. It's an amortizing style loan. It's going to recast the mortgage, and your next monthly payment's going to be a lot lower. So
Wow.
it's not an installment loan like your car. If you pay half now, and this payment's going to be the same until you pay it off. So the amortizing loan is pretty unique.
That's
in the
awesome.
ways you can do. Yeah.
Okay,
Yeah.
great options. All right, so next question. A lot of buyers, especially first-time home buyers, they don't know, what is the ideal credit score to have when you're applying for a loan?
That's right. Yeah. So the different loan programs all have minimum requirements. Really, the lowest you want to be is a 580 credit score and above. You can still get some government loans approved at that amount.
Okay.
If you want to do conventional, about 620 and above, but you do get rewarded for having the higher credit score. It does
Right.
play a parameter in some of the guidelines. So the higher the credit score, some of those guidelines can go away, and then you also get rewarded in the interest rate. So that is a pretty big pricing parameter. The higher the credit score, the better the interest rate's going to be.
Yep.
But some of the minimum, about 580 or 620 for a lot of these loan programs. Yep. And if somebody comes in and they got a low credit score, we can work with them to boost that and get them to a spot where they need to be in order to be a home buyer in the near future. So it's never a no. It's a to-do list, an action list. If they're not pre-approved off the bat.
Yeah, that's one thing I love, working with you, and I do this a lot, is I have someone that's reached out, they said they want to buy, not really a specific time frame, and I kind of introduce them to you and just say, hey, this could be 6 months, 3 months, this could be a year, but let's run the basics, because I do remember a client once who did really well. I was like, oh, she's no problem, she's approved. I think she made almost 7 figures.
Yeah.
But there was one cable bill that I think never got paid, and it docked her credit score, and she had no idea. And so then we were mid-transaction, and I'll never forget that, because now I'm like, okay,
Yes.
check everything, and it's never too early to
That's
at least
right.
figure out if you're in
It's
order?
really never too early. So with me, it's like popping the hood and seeing what's going on,
Yep.
right? So you can only really talk about specifics and answer so many questions until you pop the hood and do the application and really see where you stand in your pre-approval status. There's no obligation to close on a mortgage. It doesn't harm the credit score. It doesn't cost them money. And there's really no expiration on it.
Right.
You know, you're only going to benefit from knowing that information as far in advance as possible.
Right.
You don't want to go home shopping, find the house you love, and then do the application process only to see that I'm not pre-approved. And then, you know, the heartache begins, the panic begins. So if you can do that a few months in advance before you want to make an offer, you're going to set yourself up for success.
Yeah.
You're going to complete all the loan application fields. You're going to get all your documents in place. We're going to have a really concrete loan pre-approval. So you're dialed in when they go shopping with you.
Yeah. Not
you
wasting
know
their
exactly.
time, anyone's time.
Exactly.
Yeah.
Exactly.
Like you said, it's never too early. I think a lot of people have this notion that once they apply with a lender, one, they may feel like they're wasting people's time too early. That's obviously not the case. And then two, they think with that application they're getting a hard credit pull.
Right.
That's the big myth of, if I apply with the lender at all, they get my information, now my credit's going to get dinged. But there's only certain times when your credit is pulled. I mean, talk a little bit about that.
Yeah. So initially, I love doing the soft credit pool.
Yeah.
It doesn't harm the credit score. It doesn't even list as an inquiry.
Okay.
But it populates all the information I need in order to pre-approve the client.
Got it.
Now, when they do go under contract and you have a set close date, by law, we have to do a one-time hard credit pool.
Right.
But at that point, you have the close date in mind. They have the house locked in. There's nowhere to go, right? Like you're not going to have a downfall with having a hard pull.
Right,
You know,
right.
every lender is going to need it.
Yeah.
So-
And is there a time frame? Because can't a certain amount of pulls or a certain amount of days it can be pulled without dinging your credit
That's
within
right.
90 days, 60
So
days?
if you are wanting to shop with multiple lenders, you have a 30-day period from the
Got
first
it.
time it was pulled with
Got
one
it.
mortgage lender to the last time it can be pulled from
Okay.
mortgage lender, with just counting as one,
Got
right?
it.
So that's your ability as a consumer to shop without having multiple dings,
Right.
so to speak.
Right.
Yeah. So if you're going to do your shopping, try to do it within 30 days.
That's where people are hearing that.
Yep. Yeah.
Okay. Makes sense.
That's the
Yeah.
evidence behind it.
Yeah. Okay. Good to
Yep.
know. A lot of people, especially in our age group, still have student loans because it's so expensive. Maybe some credit card debt.
Yep.
You know, who knows what is the difference of the student loan debt versus the credit card debt?
Yeah.
Does it affect loans? Obviously applying for a loan, student loans versus credit card debt.
Yeah. So your purchase power is all determined by the DTI, the debt to income ratio. So if you ever hear the DTI, it's a big player in my max purchase price, my max loan approval.
Got it.
So with the debts, when you pull the credit, it's only what comes through on your credit pull. So we're talking, all right, your student loans, your credit cards, your car payments, things like your cell phone bill and your gym membership doesn't populate like
Right.
that. And it's all about the monthly balance.
Okay.
So in the realm of student loans, if you're on a payment plan, we count what the payment plan's going to be. If you're not on a payment plan, it's on forbearance or deferment. By law, Fannie Mae, Freddie Mac, we have to count either 0.5% or 1% of the outstanding balance against you as a monthly payment holder.
Okay.
Yep.
Yeah.
So typically the 0.5% or 1% is going to be way higher than a student loan payment.
Right.
So sometimes if they're on forbearance, we'll have them start a payment.
Okay. Yeah.
So-
I mean, again,
so it
that's why
goes-
you reach out early.
Yeah, that's right. So hey, you may need to start a payment because the debt to income ratio is too high to reach the threshold you want. You don't have to pay anything off, but start that payment. It's going to lower it way down. And then after you close, if you decide to put it back on forbearance or deferment, that's up to you.
Got it.
So
It's not necessarily about the amount of student loan you have total. It's just what you're required to pay monthly.
yes,
Got
yeah,
it.
yeah.
So
the
it
debt
still
to-
counts, but not like the amount of
That's
it.
right.
Just-
That's
okay.
right. And same with the credit card stuff. So
Okay.
that's a revolving trade line. So
Right.
which mean it can go up and down,
Right.
as you're charging and paying off. So we'll count what the monthly payment is, and two things. It does play into your debt to income ratio, but also high balance credit cards ding your credit big time.
Oh,
So
wow.
I've
Yeah,
seen it.
so if you- yeah.
Right. So just for, layman's terms, if you have a $10,000 limit on a credit card and you have $9,000 charged on it, that's a 90% usage. So one, the monthly payment on that's probably going to be, pretty high, but
Right.
also the credit algorithm's going to see that you're dependent on using credit. And it can slash your credit by 50 points.
Oh, wow.
Or even more. I've
Yeah,
seen it.
yeah.
But good thing is there's a quick fix to it. You
Right.
just pay that sucker down
Yeah.
if you have the means
Yeah,
to,
right.
and get it below a 30% usage.
Okay.
And funny enough, the next cycle, your credit score goes up.
Okay.
Yeah. So
Yeah.
so these are some things we talk about: getting your application
Yep,
in early,
yep, yep.
and we only address this if it really needs to be worked on.
Right.
If it's fine where it sits, we're not going to add more action to do items to your list that aren't really needed.
Okay, that makes sense.
But yeah, high balance credit cards ding credit. They run up
Yep.
the dets, and the same with the student loan thing. So there are ways to mitigate that with an experienced mortgage broker
Yeah.
such as myself.
Yeah, exactly.
Yep.
And like you said, give yourself time so it's not stressful
Yes,
for anybody.
That's right.
Okay.
Yep.
Awesome. No, those are great points. Are there any other common, I guess, mistakes that you've seen when people are going either applying or going under contract and say, we hear the biggest thing, don't go make any big purchases when you're under contract.
Yes.
Any other things you've seen that are just kind of like little tricks, what to do, not do, any funny stories you have about that?
Yeah. So I always like to say, hey, you're going to be under the mortgage microscope for the next 30 days.
Okay.
And, just be in a holding pattern, right? And don't do anything too crazy. Like you said, like going and financing a car or
Yeah.
opening new trade lines or changing jobs. If you can help it,
Yep.
you can still change jobs and become approved.
Okay.
Or like going self-employed when you're not self-employed already.
Yep.
Like some of those things can really have a negative impact to your approval.
Right.
So those are big ones, right?
Yeah.
You always want to consult with your lender, your mortgage broker,
yeah.
even your real estate agent
Yeah.
too, right?
Pretty much can crack down
We are
as well.
here to
Yeah.
be in a close, tight circle of communication for success.
Yeah.
So yeah, kind of harping on like online lenders, right? They're not
Right.
really credible and holding a smooth transaction.
Right.
So working with somebody local, experienced is big. It's staying in close touch with your realtor
Yeah.
and your lender and making sure that any action you do is going to be within the green
Yep.
zone, right?
Yep. Exactly.
Or, yep.
Exactly.
But also doing the framework up front, like our pass note,
Right.
getting your application in, getting all your documents in, establishing the comfortable budget, and then we're talking as well about price ranges and timelines
Right.
and everything. It's just it's a big hands-on team event. Getting all that squared away up front before going under contract is just gonna be a world-class
Yeah.
experience difference
For
than finding the house
Yeah.
and then trying to do everything on the backwards.
Yes,
Because
See that a lot, but-
so working with the professionals and getting everything squared away up front with people who are credible is probably my biggest piece of advice.
Yeah. And I always think it's funny because when we get the type of client or just they've been coached correctly to do all those things, we're through the option period and it's like, what do I do now? And I'm like, just enjoy it. It's like a lot of them are like, I should be doing something. I'm like, no, you did all the work before. We did the inspection, we did the option period.
Yeah.
You already had all the paperwork done.
Yeah.
I'm like, you just get to coast through
Yeah.
and start changing utilities
That's
and
right.
insurance
Get to
and all
coast
that.
through and you get your loan approval and all your items squared away with you.
Yep.
Completed a week or two before closing. And you just kick up your feet and know you got it in the bag and your new home is on the way.
Yep.
Yeah. So,
Exactly.
I mean, the worst feeling is having a shaky transaction. Am I going to get the house? Am I not going to get the house? Is my earnest money or the money I spent going to be defaulted, or am I going to keep it?
Yeah.
Those are just not good feelings.
No.
And they can all be bypassed with working with people like you and I.
Yeah. I mean, with all the prep work on the financial side, because in a contract, you do write in how many days you have for approval. financially.
Yep.
And I would say I'll almost venture 100% of the time by then I know if they're going to be approved because we've already done the work
Yes.
before. So I'm never worried when I fill that out that they may go past it and lose their earnest money. I've never had anyone do that because you're on it. Easy for me to, hey, the financial period contingency is going to end. Is there any issues?
Yeah.
You probably would have told me before I even need
Yeah.
to ask you, but I've never even had issues because people
Yeah.
have done what you needed or I needed before then.
Yeah.
And so we're not stressed.
Yeah. Yeah.
Obviously, there's some clients that are, slow or can't find the documents and stuff, but otherwise, if they prep correctly, it's pretty smooth on the financial side of it.
On the
at least
financial side,
I've
yeah.
experienced.
Yeah,
so.
yeah, definitely. And I've noticed the same on your side too.
Oh, good.
Yep, you already see it coming. It's
Yes.
it's like you can tell the future. So you're already ahead of it. You're on it. You know how to negotiate it. You've seen it. You've been there
Yep.
before. So you just provide a world-class service.
Oh, thank you.
Yes.
It's easy with you. I mean, being able to text you like, okay, we're this close, but what?
Yeah.
And it's just cool to be able to like, hey, have you thought of getting this from the seller to pay for this? And it's awesome to have like a teammate essentially,
Yeah.
like working. We're both working. We're not selling anything. We're just trying to make this transaction work
Yeah.
and the best for the client, which I think is really fun and
It's cool behind the
Yeah,
scenes.
yeah.
They don't see it.
No.
And you and I are talking
Yep.
and we're, how about this and how about that?
Yep.
Just to better the situation for the buyer.
Yeah,
And
exactly.
just to give them the best deal possible.
Right.
So and sometimes they don't even see it. They just see the end result.
Yeah.
Where it's like, hey, we recommend this and they
Yeah.
make it happen.
yeah. They don't know. They don't
If
know our
they don't,
secrets.
they don't know all of it in the back end, which
They don't need. That's
they
we
don't
make
need
it easy
to.
for them.
That's
yeah.
right. Yep.
It's that
Yeah.
white glove service. A lot of people that do buy, especially or even have bought, when the rates were in the 7s right now, are talking about refinancing.
Yes.
That's a kind of big hot topic.
Yeah.
Big hot topic if they had a higher rate or they're buying now and they're like, well, what if the rates drop? What would you say? Well, one, I guess talk about what refinancing even means.
Yeah.
And what that looks like. Someone that took out, a loan with you, purchased a home. We'll just use an example like 2 years ago. Maybe they were in the 7s, high 7s right now. What would they need to do to look into refinancing as a potential option?
Yeah. So as rates go down, you have the ability to refinance.
Yeah.
So one of the biggest things that stem a refinance is lowering the interest rate.
Right.
But when we do a deep dive into it, there's other things we can change, like the loan program, remove mortgage insurance, or AKA PMI,
Right.
change the term. Maybe we're lowering the term or modifying the term. Escrow accounts, if they want to waive it or collect it or reshop their homeowner's insurance. There's a lot of things you can do inside the refinance to make it a net benefit to them.
Yeah.
To really be like, wow, that was a slam dunk. I not only lowered interest rate, but I did X, Y, Z,
Yeah.
and lowered my overall bills and made the mortgage work better for my current day life.
Right.
Because things change, right,
Yeah.
over the time.
Exactly.
Yeah, so I like to identify that, and just name of the game is lower the payments.
Right.
So
Right.
we're seeing slightly elevated interest rates right now. We talked about buying if you're comfortable with your payment and cash to close. You have security. You're going to be in the home.
Right.
But you can get really good deal on the house right now, and then just bank on that refinance in the
Right.
next 1, 2, 3 years. Refinance is pretty easy. You can do a full documentation refinance, which means like you're requalifying for the
Okay.
mortgage, even though you're lowering your bills. They want to see that you're still credit worthy,
Right.
to do it. Or you can do these interest rate reduction loans, which is
okay.
like a streamline essentially. Some loan programs qualify for that, and it's like they just check to make sure you're making your mortgage payment. They'll do a credit pull, and that's about it.
Oh, wow.
They don't need income documents, they don't need asset documents, and they just lower your interest rate, and bam.
Wow.
I mean, you can close pretty quick. So yeah, on average, your typical homeowner is going to refinance once or twice.
Okay.
Inside owning that particular property.
Right.
Yeah. So the percent's high of someone doing that.
What does it typically cost the homeowner to refi?
Yes, between lender fees and title fees, it can be a couple $1,000s.
Okay.
For myself, I like usually waiving my lender fees
Right.
if they're a past client of mine.
Yeah, exactly.
I value their continued business, their trust in business, and taking care of them. So
Yeah.
it's nothing for me to say, hey, let me help lower the bills or maybe change some terms in there for you.
Yeah.
And that cost, they can roll into their loan amount most of the
Right,
time,
right.
bringing them to $0 cash to close.
Right.
So usually they're going to have the equity and appreciation spread, and they roll in that couple $1,000s. And most of the time, they're going to skip 2 mortgage payments as well.
Okay.
Yeah.
Even better.
Yeah.
Yeah.
So keep a little money in the pocket.
Yep.
Nothing to close,
Yep.
and then when your first payment hits on the new loan, it's lower.
That's awesome. Yeah, and
Yep.
you didn't, like you said, if you want to pay it up front, but if not, yeah, it's just
That's right.
rolled right back in there. You
Yes.
don't even notice.
Yeah. There's a lot of customization tools within refinances as well.
Yeah.
Yep.
And I know a lot of people ask, like, okay, well, do I wait a point lower than I'm at? And I'm sure you're going to say it's different for everybody.
Yeah. Yeah.
Based on just a generalization, you kind of like to see the current interest rates be about how much lower than their current locked-in rate.
Yeah. A good rule of thumb is 1%.
Got it.
So
Yep.
if they're at 7%, I'd like to see 6%, 5.99%, or even lower, right?
Yeah, right.
Hey, we're gonna shoot for the lowest.
Yeah.
But they can also do other things that make it advantageous, like they're removing, maybe they have high mortgage insurance or they're paying PMI,
Right.
and they can remove that as well as lower the interest rate.
Right.
Or they're changing some of the little terms within their refinance that really make it worth it.
Right.
Yeah. So as long as there's a conglomeration of enough to tip the needle to say,
Yeah.
hey, this is worth it, we'll
Yeah.
do it. I've also turned people down and say,
Yeah.
hey, this isn't the time yet.
Yeah.
Let's wait a little bit longer because of XYZ, and I'll educate them thoroughly.
Yeah, I
about
think a
that.
lot of people are hesitant even to reach out to a realtor if they're not ready, or a lender, either if they're not ready or unsure, or they feel like wasting time, or
Yeah.
that we're gonna pressure them into buying, selling, or refinancing, when in reality, especially if it's a past customer and you're waiving the fees,
Yeah.
you're gonna do what's best for them. It's not just refinance, check, like
Yeah.
it's not worth it to them and you if it's not worth it for them saving money.
Transparency is huge.
Yeah.
With me.
Yeah.
And because I always like to, say, hey, what if I'm in their shoes?
Yeah.
How do I want to receive this and get taken care of? But it might say, hey, it's not ready for now, but in a couple months it will be.
Look out for this rate, or let's be in touch.
Yes.
I think always, if you're unsure, to reach out to one of us and I'll put you in contact. And Austin's great about kind of, like you said, maybe the interest rate, but maybe, hey, your homeowner's insurance looks high, or your equity looks high that you could get the PMI off, things like that.
Yes.
So it never hurts to just, hey, can I get a little evaluation on where I'm at?
Yeah.
And
Yeah.
just kind of get that connection, just for when rates, hopefully do drop.
That's right.
You're ready.
Yeah.
Just like when you're buying and pre-approving.
Yeah, that's right. On the flip side too, I've been doing some cash out refinances.
Okay.
Funny enough.
Yeah.
A lot of investor clients are tapping into their equity
Okay.
in their real estate portfolio.
Yeah.
To invest somewhere else, or even buy more properties.
Wow,
Because
yeah.
it's a great time to buy.
Right, yeah,
Right?
exactly.
So they've maybe held property for 10, 15, 20 years. They got a lot of equity in there, and they want to tap into a little bit of that and
Yeah.
use it towards a down payment. So these refinances can aid you in different ways.
Yeah. Okay.
Yep.
That's
Yep.
so interesting. I love that. In the news right now, we're hearing, I'm sure you've been bombarded maybe with funny memes, who knows, 50-year mortgages. So at least in Austin, we're commonly using, 30-year mortgages.
Yeah.
I know some people in California or, other parts, 40 years, but now we're hearing this might be an option, 50-year mortgage. What is your general take on a 50-year mortgage? Obviously, there's positives, there's negatives.
Yeah.
What are your thoughts?
Yeah, absolutely. You see the memes on social media, and I can't help but laugh as well. It's all, I take it all with a grain of salt. I laugh at everything.
Yeah.
But you're right. There is positives and negatives to it. And, let's just talk about the negatives out the gate. Wow, I want to pay on a house for another 20 years. I'm going to be 50 years into it, paying more interest.
Yeah.
Who thought of that, right?
Yeah. Will you own it when you're alive?
Yeah. Will I still be, breathing when I pay this thing off, right? Type of thing,
Exactly. Yeah.
Which is, a true thought, right?
Yeah.
So that part of it is, wow, I'm going to pay double the interest, close to, for
more than what the home could be worth.
What it could be worth. Yep. So those are the negatives for sure. A positive hot take out of it is now your term is stretched out longer and your monthly payment's going to be lower. In that home buyer where it was out of a grasp, it now comes into focus.
Right.
And I can actually afford that house that I want.
Right.
So let's dive into that 50-year mortgage and see what it looks like. And that makes them a homeowner.
Yeah.
Compared to any other option out there.
Right.
And to speak about the former note we just had, refinancing.
Yeah, exactly.
So maybe they use the 50-year mortgage to get in there because it makes the budget right. And then after a couple years, they're situated better where they have equity, they got some appreciation, they made it their own, and they say, okay, now I'm ready for a 30-year fixed or a 15-year fixed.
Yeah.
Right? And let's hopefully get the interest rate down too, and just kind of better themselves. So closing out a 50-year mortgage rate doesn't mean you're stuck with it forever. I like to call it a barrier of entry.
Yeah, exactly. I think it's a different way of looking at it. Obviously, we see that. We see what you pay over the life of the loan, but especially if you're saying it's common for even a 30-year to refinance once, twice.
Yeah.
That if you can get in while the prices are lower, always in history have prices gone back up.
Yeah.
Right now we may be lower, but at some point they will start to rise again.
Yeah.
And the interest rates, whether they come down a little bit or not. If they don't come down, great. You got in. If they do, even better.
Yeah.
Refinance, but gets you in, paying into a property, and ability to live in a home that you can at least make yours and build equity in it. Maybe a little slower if based on the monthly, but
I always say renting, you're paying 100% interest.
Yep.
You're not getting anything back.
Yep.
Right. It might be easeability of living there. You don't have much responsibility.
Right.
But you're not building any equity. You're not building any appreciation.
Right.
You're building that for somebody else.
Yeah.
So I like to talk about all the options we have at hand, review numbers, review, scenario 1, 2, 3, 4, 5, 10, whatever it might be. And we're going to consult and pick the best one.
Yeah.
So
you're obviously not going to push someone into a 50-year if they can do a 30-year, right?
That's
never going to be the case. It's just if that is the literal
only
best
way.
option, only way, then it's there, as a tool.
Yes.
Hopefully not using it, but if you do, you do.
Yeah.
Awesome. That's all my questions for you.
Yeah, I have one for you. So
Perfect.
I saw, speaking of social media, I saw there's a statistic that Austin, Texas has the most inventory and sellers on the market in the United States. Is that true?
Yeah. So right now we are considered one of the top buyers markets in the country, which is, it makes buying, it's incredible. We can go out there and sellers are basically, what do you need?
Yes.
How do we make this happen?
How can we cater to you?
Yeah, a buyer's market means there are more sellers out there than buyers, right? At the very layman's terms.
Yeah.
So if someone needs to sell, they are going to figure out a way, and that's via price, doing any repairs that are needed, giving concessions. But it is interesting that Austin has come full circle to when we were very much a seller's market.
Yeah.
As far as I get this question a lot is, well, when is it the bottom? When have we hit the bottom? And it's so hard to answer that. And I never want to say, I think in the next few months we're at the bottom and prices are going to go back up. No one has a crystal ball.
Yep.
If we did, I would tell everyone I knew, we'd have a timing. Okay, here's when we're buying. We know, or at least I could say confidently, that we are very close. At some point, prices are going to go up.
Yeah.
If you look at a graph, and we can post one right now, historically, Austin prices come down, go higher. I mean, we went up so high during COVID, so it feels really tough. But anyone that bought before 2020 and below has still so much equity.
Yes.
It's only, the people that bought after that are feeling the crunch of, golden handcuffs locked in to their rate, or, the prices did come down from when they buy. And that's super unfortunate. But holding to the pattern that the prices will go up is kind of what you have to believe in and understand, how economics works. So as a seller, it's scary. But as a buyer, it's actually really exciting.
Yeah.
I mean, the ways you can be creative is just really fun. And
that's right.
Whatever the issue is, whether you don't have enough cash or the monthly is just going to be too high, there's so many ways around it.
There's ways around
and
it.
Typically what I'm seeing is prices, whatever they're listed at right now, not even their first list price, whatever they're at now, they're usually closing at around 93% of what their last list price was. So that's a big chunk off of a lot of the cost. So kind of using that when I'm showing homes is, okay, your budget was $250, but let's look, right above that, because prices will come down.
They're likely to come down.
Likely to accept an offer. Obviously, it's not every seller, but most of them are likely to come down to get it under contract.
Yeah.
So it's very interesting, though. Very interesting times.
Yes, it is. Yeah, I think. Well, I mean, we've been in it long enough to see the swing from where the sellers were sitting on, the crown gold,
gosh.
and then now the buyers have all the power, most of the power, I would say.
Oh yeah,
so
100%. You put a sign out, and you're like, okay, hand me my offers. No work.
We've seen the end of the pendulum swing, right? Both sides of it. So it's unique.
Yeah. It's very unique and very interesting. It just has, obviously I have a few homes for sale right now. You have to get creative, make sure the homes are move-in ready right now, because unless you're going to give a big discount on, the price or concessions, if I have the choice, I want to move into a home that it looks immaculate.
The curb appeal.
Is a big stuff thing. That didn't really matter in 2021 or 2020. So it's important to listen to, agents and getting feedback, having the agent get feedback from their office, and doing everything you can. Yes, it can be expensive on the front end, but you won't have to give away so much as a seller if you put in that work on the front end.
Yeah, I like it.
Yeah, it's great.
It's always something interesting and new.
Yeah, no, it's fun. That's why I love real estate. It keeps you on your toes. You get to work with people on the biggest purchase of their lives. Most scary time, but best time. So.
It feels good.
Yeah.
Intrinsically. Yeah. Helping out in that process and being an anchor for them, getting across the finish line, and seeing them in their house, their new home.
Yep.
It feels good.
Yeah, exactly. Well, cool. Well, any other questions? All good? Yeah.
Not too much.
Yeah.
We covered a lot of bases.
I know. I'm excited. So, if you think of any other questions for Austin or myself, just send me a message. We can always get back to you specifically, or do some more videos, more Q&As if wanted. So reach out. I have Austin's information, and I'll post it. So you can also reach out directly to him if you have questions about buying, refinancing, any and above, all of the above.
Yeah, please.
Yeah.
Consultations go a long way. So.
Yeah, never too early, as we mentioned. So we are here to help you. And let us know if you have any other thoughts and comment below. All right. Thanks.
Thanks, guys.
Thanks, Austin.
See you. Thank you, man.